Welcome back to Trading 360. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange, and it's time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Great to see you both. We've had a lot of volatility, Scott. Last week, especially into Friday, a real turnaround. But, we were talking about it's the worst week of the year, and we saw all kinds of levels being broken or things dropping to new levels. What say you about opportunity here? Because there were some people who use that to buy. You have Leon Cooperman who says, look, I'm actually shoring up cash. I'm holding a lot of cash, selling into market strength. What are you doing?
I am just trading the order flow back and forth, Nicole. We've gone from the buy the dip to what I believe is a sell the rip scenario here. I mean, Friday afternoon caught everybody off guard, myself and every professional that I have spoken with, trader, analyst, whoever it might be. So I don't know that we're going to get those types of severe moves on a daily basis or a weekly basis, but there's no question that the volatility in the marketplace is here to stay in the short run. And for now, for me, there's more of an opportunity to sell rallies than there are buying dips right now.
Okay, so you're selling the rallies. You're watching the 200-day moving averages of Taiwan Semi. Average
yes.
Of Taiwan Semi in particular. Tell me a little bit about your thought here for this name.
So this is a name that I really liked going into today, even before this news came out just over the last couple hours or so, about their investment that they're going to make in America and building some places here. The stock hit the 200-day moving average. It has dipped just below that, but that has been really significant support in the past. And I know that, the big chip names are seemingly out of favor right now, at least, maybe for this week or this month, who knows how long. But I really like the opportunity in Taiwan Semi here. And because option volatility is actually elevated quite a bit, rather than buying some upside by buying calls or buying a call spread, I'm actually going to sell a put spread. So I'm selling this week's very, very short term. I'm selling this week's 180, 175 put spread for a $2.50 credit.
Okay, understood. And look, I mean, we've watched the semis be somewhat out of favor, right? They've really underperformed of late. You talk about new deals, new ideas, and they have been beaten down. So now what, right? Rick, take a look at the charts, please.
Yes, and thank you, Scott, for joining us today. And we can see that we are at an important point on this chart, it seems like, because we have fallen below some of our important moving averages, as well as our volume profile point of control. All of that was kind of in the general area near about 202 or so. We declined from these 52-week highs near 225. From there, we have fallen off. We've fallen below our -1 standard deviation channel. We take our blue linear regression line, our line of best fit. We take 1 standard deviation below that mark. Traders often use that as a way to gauge how extreme a price move is and potential support or resistance. We have fallen cleanly through that one. Now, I don't have the 200-day simple moving average. I do have something fairly similar, the purple 252-day exponential moving average. So slightly different, gives a little more weight to the recent price action. Neither one is better or worse. They're just a little different here. So we can see, though, that this lines up pretty well with a large volume node. You can see this spike in our volume profile study. So around 175, I believe that matches up pretty well with one of Scott's strike price. That seems like a key supportive area to watch. To the upside, another volume node right about here near 190 or so. That would be an area where you could potentially find some resistance, Nicole.
Okay, thank you for that. Final thoughts here, Scott, on that name?
I really like this longer term. I know this is a short term trade, and I'm glad Rick brought up the difference between simple moving average and exponential moving average. That's something that all traders should really know the difference of.
All right, next up, we're looking at TJX Companies around 125 today. We're watching some of these retailers. How is sentiment? How is the consumer, et cetera, et cetera? What stands out to you about TJX? That's the parent of TJ Maxx and Marshalls.
So on a more macro basis, like you just mentioned, it all comes down to the consumer. Right now, the consumer is kind of in a a no man's land area, if you will. They've been so strong for so long, and now we're seeing cracks in the consumer going to less expensive options, if you will. So when I look at TJX, top and bottom line earnings beat. It was a fantastic earnings report. All segments had better than expected comp performance. Now, their guidance was a little cautious moving forward, and that's because of tariffs, because of the consumer. But the analyst community actually loves this stock right now, and they have really upgraded this thing. There is really big resistance almost right here, right around 128 or so. There's been a triple top there. If it breaks through there, though, Nicole, which I see it happening, there's a huge breakout possibility. Option implied volatility, since it's after earnings, is pretty cheap right now. So I'm just buying some naked calls on this one. I'm going out to April, and I'm buying the April 130 strike calls for about $1.70. And if this thing, again, breaks through that resistance around 128 or so, it's got a lot of room to run to the upside.
Yeah, over 20 analysts. Most of them have overweights. To your point, they had broad sales growth, which they reported last week, of all income brackets there. Also having that broad base, that's good news there. The outlook is something we have to wait on here a little more. But TJX, let's see what Rick says about the chart. Please, Rick.
Yes, and sometimes people have trouble understanding certain parts of technical analysis, not necessarily the numbers and the jargon, but rather that it's not necessarily predictive. We're just trying to identify key price levels here. So when we look at this triple top type formation that Scott was talking about at our red line near 127, we can see that not only did price repeatedly bump up against this area and fail, you could also match it up with our blue linear regression line that I mentioned earlier, our line of best fit. I think you could even argue that you could potentially draw a very modestly sloping downward trend line. We are making lower highs. We are not making higher closes or new intraday highs. So that would be perhaps one way of looking at it, is that we have a key price level here near around 127. Now, if you were to have a more bullish perspective, the evidence might be that we have also an upward sloping trend line here going across these lows. Price is hanging on above our two volume node areas near about 120 and 125. Prices hanging on above our moving averages that we follow here. So this would be kind of a setup for an ascending triangle type of pattern here. Once again, triangles, not predictive necessarily. What it does, though, is identify these two key areas. So on the upside, we have this upper boundary near about 127. To the downside, we have our trend line, our recent low, and our volume node near about 120. So that's kind of why we would think about these things, and kind of just some clarification on prediction rather than identification, I guess you could say, Nicole.
Okay, thank you for that, Rick. And all the clarifications that come along with technical analysis. I mean, the levels that we should be watching, where people may be prompted to sell or buy when you're doing that. Scott, final thought, and then get to Lowe's.
Yes, option volatility, very inexpensive, which is why I really like this upside breakout here. And I think those 130 calls are pretty cheap.
Okay. And now we take a look here at Lowe's today. Some of your thoughts on where this could be headed.
Yeah, I'm not too don't have a great bright outlook on the housing sector in general, like many people right now. And Lowe's had a really nice pop after earnings. There was some short-term excitement around them, Home Depot, but you know what? This stock in particular failed to pop above the 200-day moving average. And with the housing outlook looking very dismal, as well as the consumer pulling back on spending, on bigger ticket items, maybe home upgrades, home remodeling. I'm not really liking this one at all. So here, I'm actually buying a downside put spread. I'm going out to April expiration as well, and I'm buying the 240, 230 put spread, $10 wide for about $2 here. And that is well within what the option market is pricing in as an expected move out to April. And listen, I would love to see the turnaround here for all things, but I think the housing market is going to stay in this kind of malaise, if you will. And this is one of those opportunities, in my estimation, of a sell the rally or sell the rip instead of buying the dip.
Okay, yeah, understood. And this is what you have to do. You have to navigate through the malaise, through the volatility. Rick, your thoughts on the technicals, please.
Yeah, another situation where we have a very large confluence of various technical indicators here. You can see that, once again, our purple 252-day exponential moving average is coming into focus here. Slightly different than Scott's 200-day simple moving average he was mentioning. And there is one important difference. I believe Scott said it was below the 200 SMA, but price is above the 252-day SMA. So the devil can be in the details with some of these. It's important to not just look at only one indicator. Similar ones can tell you different things sometimes. So, and by that, it's also not like it's strongly above the 252-day EMA. In fact, I would say it's more like we're hanging on for dear life above it. We've also got our -1 standard deviation channel and our volume profile point of control and our old broken white downward sloping trend line all coming together right around the same point here, near about 248 or so, 248, 249. We've also got our yellow 21-day EMA just above at 249.46, right on the exact price there. So a lot of key resistance all coming together in the same area. Could be a tough spot to break above. If we do get that breakout, look here, we've got another volume node lining up with the top part of our old downward sloping channel, our darker blue line there, near like 264, 265 or so to the downside if we were to move lower. Recent lows, and then another key low here based on our old low, like relative low point there from back in, what is it? It looks like August or so. So 239 to 244 or so would be a support level to keep an eye on there.
Okay, thank you, Rick Ducat, there on the charts. And Scott, we are happy that you joined us today. Thank you for doing that, especially on a busy Monday after last week where we saw all that volatility. So we're glad you're here. A final quick thought, Scott Bauer.
Yes, I think we need to be really cautious here. There's definitely opportunity. I'm not saying that cautious means that we're going to see a 5-10% drop or so, but with the constant news flow coming out, which begets uncertainty in the market, that's what we need to be cautious for.
Okay. Thank you, Scott Bauer, Prosper Trading Academy, and Rick Ducat there doing the technicals and charts. Thank you both there for the big three. We looked at Taiwan Semi, TJX, and also Lowe's.